Hello traders, this is Blake Morrow and you are listening to the daily Roundup webinar. Real quick, can you guys hear me okay? Test, 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 test. Just want to make sure that my mic is working. Seems like it's working. Okay, all right, let's get started. So, yeah, I just got, thank you, thanks guys, thank you. I just got comments that it is working. All right, great. So, you know, I just actually tweeted this chart and this is the Aussie Canadian. I'll just tell you real quick. One of the guys in my office, I tweeted about him too. He was looking at this. He goes, "Man, maybe that Aussie Canadian was a good pickup. With with crude oil so weak." And I was thinking, man, with this China deal coming up, phase one, Aussie's been beat down. They're hopefully going to get a hold of the fires soon, and everybody already knows what the negative GDP impact is going to be with Australia, but then the positive impact moving forward on rebuilding, that's going to start hitting the wires too, and that's going to start hitting people's assumptions once they've tallied up the damage. Anyway, there's a good chance that you're going to see this Aussie Canadian at least recover a lot of these losses. And if you look at what has happened as of late, this pair has gotten absolutely beaten down. I mean, this is a let's see what percentage-wise move we're talking here. I mean, for the Aussie Canadian to move, almost 3%, that's a big move in just a couple of, just a week and a half. So, for it to recover a percent and a half, I think is very doable for this particular pair. So that's what we're seeing. Okay, now, and I'm not going to talk any more about it because it's not even a currency pair that I normally cover. It's just one that got brought to my attention, and every once in a while I'll look at it, and so I'm bringing it to you guys' attention as well. But let's talk about what just happened. So President Trump made his announcement on Iran. Fox News was reporting beforehand that it's probably going to be a de-escalation. They're going to increase sanctions. No one's been hurt. That's what they assumed. And I'm like, and I told everybody in the chat room before this all, moved, I said, if this is the case, we're going to see that dollar yen spike back up to 109. And, here we are, we're back at 109 and actually we're above it now. So if you think about everything that's happening here, is it entirely possible that we get a move, a continued move in the dollar yen even higher back up towards this resistance towards 109.50, 109.60? Yeah, I mean, stocks are bid up. Everybody's, bullish risk again. You've got the China phase one deal signing, which I'm more interested to see what the market reaction is post China trade deal, but this could actually take us a little bit higher. I drew this out like this morning, I think, around the 109 area, but we're well above it now. So the question is, do we continue? And we had a false breakdown, by the way. False breakdowns always lead to a reversal. So not always, but many a times they do. And that's what's happening here in the dollar yen. We are spiking higher. I think we could very easily trade back up now towards 109.20, 109.40. I think that's very doable for this particular pair. Okay, so that's the dollar yen. Now, speaking of false breakdown, you have the euro dollar that did a little false breakdown post the little news event here. And the euro dollar actually pushed below those lows. Then it started to move higher. I'm not convinced yet about the euro. I'm still long, by the way. I still have my position at like 111.40 and change. I'm sitting in it. I haven't added to it. I'm just sitting in it. And frankly, I'm not happy with it. I'm not happy with it. But by the end of the day, if we can close back above 111.30, really above the 200-day moving average, which comes in at 111.40, I'd be a lot happier above there. But really, just kind of off of these lows, if we close off of the lows, I'll be a little bit more motivated about it. If not, I might just pull it off and scratch it as a loss, because why sit around in it, or at least move my stops to today's lows. That would be another idea. Another thing about the market that we're seeing here is the cable keeps probing through this. Speaking of false breakdowns, we have the cable. It keeps pushing below this, this triangle. It's very choppy, very choppy. And I'm not long. I'm just keeping an eye on it. The thing is if we get back above like 131.40, 131.50, I think it's going to squeeze. I do. Like I said, I'm not long. I'm just keeping a very close eye on it. Some of you may be wondering about the US dollar Mexican peso, because following the Donald Trump comments, naturally what you would see is Mexican peso strength. I actually had a bid at 1875 in the market, but after his press conference, or actually, once I had the idea that okay, this is a de-escalation for sure, I just canceled my order. Now, why did I have an order there? Well, it is the 127% extension of this consolidation. It's also these trend lows over here in April of this year. So I had an order there. Now, could we still test it and bounce? Sure, we can. However, I'm not willing to stick my neck out, not with stocks up where they're at. I'm just not willing to do it. Now, daily sentiment index, the reading yesterday was at 93. It was at 93 yesterday. It'll probably be 93 to 95 today. So what that tells me is investor sentiment is still extremely bullish, and it's probably even a little bit more bullish today, which makes it more extreme, which means that I do want to actually buy the US dollar Mexican peso. I just don't know if I'm going to do it tomorrow or the next day. But what I think can happen here, just because, look, just keeping stocks in mind, we can break through the support and maybe even make it all the way down to 18, this 1860 level. I think that's entirely possible. So therefore, I pulled my bid, and I'm just kind of standing aside at the moment with that. Now, I guess two other things that I'll talk about that are not FX related. They are, market related, not FX related. First of all, is crude. We were looking at 62 as being really key support on crude, and this was a big reversal. Once we flushed through 62, it was like just absolutely destruction there. Now the question is, where can crude go? I think crude can come all the way down to probably channel support down here around 59. I think that's entirely possible based on this reversal, false breakout, reverse to breakdown. I think that could really play into more weakness. If you are a crude trader, which I'm not, I'll be the first one to admit I'm not a crude trader. I've traded it probably a handful of times in my life, and every time, well, it would be a lie to say every time. Most of the time, I got my butt handed to me, and I said, I don't even want to deal with it. But if you guys are looking to sell crude, I think maybe a move back up to 61, or probably 62 if you could get it. I just don't know if you're going to get it. Might offer you a good short entry for those of you that are looking to trade it. Also, one of the big reversals of the day, last one I want to talk about is gold. Gold, big time reversal. Massive move up last night following the Iran situation, Iran-Iraq situation. Divergent relative strength. We are now back at the 15, well, we're at 1550, but we're back, right at the 1555 level. Really key support. If we close below this breakout point here, I would expect that we go a lot lower. I would think that maybe 1500 is back in the cards. Am I short? No, I'm really more of a gold bull, so I don't want to be bearish or try to trade the opposite direction. But I've been a bull for a long time, and obviously over the last couple of days, I've been skeptical of this move. So does that mean that I want to buy a pullback if we hit 1500? I don't know. That's one of those, we'll see when it gets there. If it gets there and we approach, the 1500 level, depending on what's happening, I may. One of the things that I think that gold is being used for right now is a risk off tool. I mean, obviously, under geopolitical tensions like what was happening last night, it was definitely bid. But I think it's been bid for a lot of reasons, and I still want to be a buyer on dips. The question is, if it gets down to a technical level that I deem appropriate, like let's just say 1520, if it gets down to 1520 and I feel that it's appropriate down there to be on the long side, I might. But this is setting up to be a false breakout, and even on a weekly basis, depending on what happens the rest of the week, we got a false breakout here that, chances are if you get a false breakout, it's going to lead to a reversal, more of a reversal, could lead to a full-on breakdown. I would rather just be buying dips somewhere much deeper than where we're currently at than these levels. So, I guess to sum it up, yeah, my hands are off gold, and I have no desire to be on the long side. And I always get the question, well, Blake, if you don't want to be long, why don't you get short? And I always answer that question with saying, just because I don't want to be long or short something doesn't mean I want to be on the other side of the trade. I am very well aware of my weaknesses as a trader, and one of them is I'm not good on both sides of the market. I'm good at directional trading, bias trading. So if I'm long, if I'm bullish the Aussie, for example, I'll find places to buy it, and that's it. I'm not good at buying it, then turning around, shorting it at resistance, and then buying it again on dips. I'm just not good at it. So therefore, for me, I'm more comfortable on the long side of gold, just not at current levels. I hope that made sense. Couple quick questions, then I'm going to let you guys go. Peter he wanted to mention, I'm surprised by the greenback strength that started even before the Iranian shenanigans. Yeah, the dollar strength, I think, and as I mentioned yesterday on the Face webinar, and I believe on this webinar as well yesterday, I think a lot of the dollar strength is a lot of portfolio managers taking back dollar short bets at the beginning of the year because they thought we were all breaking out, whether you're talking about the Aussie or the Euro or whatever. And I think a lot of them took those trades back, and so that's what's happening right now. And I think that's been happening the last few days, actually. Alex says SPX gearing up for 3,600. Data seems okay besides the obvious. I think I still think 3,300 is the place. I mean, that's the level. Look at that big, huge candle. It's beautiful, right? I think 3,300. Seeing if we're going to be up there following the China/US signing next Friday. Is it next Friday? Next week? Next Wednesday? Whenever it is. When that happens, I assume we're going to be at 3,300. What happens after that is, really key for me. Lastly, I'm going to, just because Peter asked, can I look at dollar index? Yeah, we're at the 618. Where the dollar holds the previous channel resistance, I think is going to be pretty key here. So, if you look like that, we're past the 24% retracement. On this, we are past the 38% retracement. So right now we're at the 618 of this most near move. So I think that, dollar's got dollar's going to make a decision at current levels, right? So I think the euro at a 111 is still pretty key. It's still trading really heavy. It really is. All right, guys and gals, my name is Blake Morrow. This is the Daily Roundup. Remember, if you haven't tried out ForexAnalytix, if you want to chat with me throughout the day, especially from the Face webinar to right now, I've been in the chat room aside from the time that I had to shower and then I had to go eat, but that's where I'm at. So, if you want to be part of the ForexAnalytix community, make sure you give it a whirl. Try us out. I will talk to you guys tomorrow. You guys have a great evening, and good luck in Asian trade tonight. Oh, by the way, there's China trade balance too tonight, just or Australian trade balance, just in case you have any Aussie exposure. All right, thanks guys. Have a great one.